Good morning, afternoon or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. We are coming to you live from home. We are trying to catch a little bit of downtime on a Saturday. Sometimes that's quite hard to do when we cover a market that operates 24/7. So despite trying to catch a little bit of downtime, we still want to make sure you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And a common theme for these Saturday videos has been the exploration of global liquidity, what's going to drive that, and the alignment with global liquidity and technically what we're looking at in the markets. So what the charts are predicting, they're all pointing in a very similar direction. And also other cycles, cyclical cycles like the Bitcoin 4-year cycle theory, election cycles, business PMI cycles. It all points in the same direction. We like to use the phrase when it walks, talks, and quacks like a duck, it's a duck. And we may have had yesterday some further news in regards to a driver, not the predominant driver. I think the predominant driver is going to be the Fed and the fact that they're going to lower interest rates, which is going to take the wind out of the dollar sale. When people are going out of dollars, typically they're going into other markets, or when they're increasing the monetary supply, USM2, which has already started to increase. That's generally good for things. But that's going to be the predominant driver in our assessment, and we've spoken a lot about that. One other factor, of course, is going to be central banks around the rest of the world. And we had news yesterday, which we're going to be starting the video off, in regards to China considering allowing refinancing on $5.4 trillion in mortgages. Now, I think the March 2020 stimulus was to the tune of about 7. So this is very interesting. This came out yesterday. We'll take a look at some Chinese indexes in regards to the Hang Seng, in regards to iShares China large cap ETFs. They're showing similar. They're not quite or as far ahead as perhaps the US stock market, certainly, or, altcoins, or even US, UK, EU housing. But they're kind of basing... When you look technically at things, they're all kind of basing, or many things are basing, ready for what we think is a phase 2 uptrend. So we'll be talking about that. Also, the Bank of China also bought $56.3 billion in government bonds for the first time in 2 years. We'll look at China Central Bank's balance sheet. There is a correlation there with the US markets. And then we're going to be finishing the video off with some talks on AI. We are moving towards a very interesting world. Yesterday, Brian Armstrong announced that they're essentially facilitating, or have now facilitated, AIs paying other AIs with crypto. Now, this seems a little bit gimmicky, but we'll explain why it's not, certainly in regards to the roles that AI is going to play in the future, and how actually them having a kind of economic autonomy is of grave importance. If you want to instruct AI to do something for you in the real world, it needs to be able to interact with that real world through more than a text communication, perhaps a financial one, and crypto is going to be what enables that in this kind of new world that we're moving towards. We'll recommend some books. A great book is Norbert Wiener's The Human Use of Human Beings, wrote in the 1950s. Really good book. It kind of talks about technological evolution. And it's really concerned with communication. It's a book on cybernetics, so basically communication as it relates to machines. And another one, of course, from the World Economic Forum, Snake himself, Yuval Harari, Homo Deus. Great book. It talks about the kind of dataism religion, if you will, towards the end of the book. And it also explains why people are so addicted to social media, which we might do a video on entirely. So this is a crypto market update, not a philosophical AI and how it's going to change the world update. Let's kick things off with a Bitcoin chart. So crypto had a bit of a crappy day yesterday. I think this probably has quite a bit to do with the Dixie at support. So the dollar's been showing a little bit of strength just to start off here. We'll talk about the dollar as we pivot into global liquidity. We were looking at a suggestive area, or an area that you were likely going to find support acting exactly as that, and how that was going to ultimately lean on risk assets. Of course, crypto bearing the brunt of it, but generally the dollar is in a broad downward trend, just like it has been in every crypto bull market. We'll show you that correlation in just a second. But Bitcoin is still very much in a broader uptrend. And this is just, in our assessment, or our opinion, technically, a pullback within a broader uptrend. And you're kind of pivoting or coiling around your, very important that you didn't take this low out here. You had a bit of a squeeze here that actually target was made Very interesting that you're kind of pivoting and coiling around this splitter of the broadening sort of wedge. I ultimately do think that this is going to result to further upside. And I think if you look at the altcoin market, really, they've just given way to Bitcoin. There is going to be a resurgence for Bitcoin that's largely going to align with things more broadly. You know, we're still really yet to see an alt season, but when you look at certainly the BLX, you know, the anomaly here is that crypto generally in regards to its cycles and it playing out is following it, but at a far accelerated rate for the likes of Bitcoin, Ethereum, Solana, the ones that have seen institutional inflows. The altcoin market is basically perfectly where it should be. So just a quick comment on Bitcoin. Dollar strength really kind of playing out. We had some interesting news. What did we have news of yesterday I was going to share? I think I've deleted it. We had news from Canada in regards to their, I think it was GDP, and their SOAR there. We also saw that in the US. We also had news in regards to Eurozone inflation cooling. So we think inflation is a slain beast. This all factors into global liquidity, which brings us on to our next point. So nothing to worry about with Bitcoin. Altcoins just along for the ride, unfortunately, but their time will come when they overperform dramatically. We've been talking a lot on these Saturday meetings about global liquidity cycles. So this is the Global Liquidity Index. This is from the Financial Times. The source is Cross-Border Capital. You'd have seen this thrown about. We've certainly thrown it about a lot. There's lots of cycles that overlay with one another. So the PMI cycles, which we've shown you, let's do it all in if you're going to talk about it. Show it. US PMI is what we want specifically. We had PMI information actually out yesterday, I believe. So PMI cycles align with global liquidity cycles, which aligns with a Bitcoin 4-year cycle theory, which also aligns with election cycles. We looked at in yesterday's video, we showed you a very interesting bit of data from Schwab that looks at the past 12 times the Fed have started to lower interest rates, made that first rate cut, and then where the S&P was 12 months after. Only 2 of those times being through the telecom and dot-com crash and the 2008 financial crisis did we see negative returns 12 months later. So it's an idiosyncrasy that we've dispelled many times, but continue to dispel, that when the Fed lower interest rates, the markets are going to crash as a result of it. You have to understand in what context are they lowering interest rates? What's the environment? And we think the environment is one where actually we don't envision a recession, a crash, until we get evidence that there is going to be one. And we think markets have got this grace period that we've been talking about that aligns with all these cycles, and they're going to do well likely towards 2026. Potentially, best guess for me, back end of 2025. So spoke about global liquidity. There was some people clowning cross-border capital and saying that he's kind of fit the model here. But then, of course, in a brilliant fashion, I think he went all the way back to the 1968 to show you that generally global liquidity cycles do get followed in regards to global liquidity. The main driver of this, of course, is going to be dollar weakness. So we saw with the JPY a great example of how central banks manipulate the markets through interest rates and thus a currency. When currencies are strong, that means markets generally are going to be weaker. And when currencies are weaker, that means markets are generally going to be strong. And the DXY, the dollar, is the world reserve currency. It's a barometer really for liquidity. When the dollar's coming down, that means generally liquidity is on the rise. When the dollar's going up, that means liquidity is getting sucked into the dollar, or it's not very forthcoming generally. Not always the case. But the dollar rolling on the back of the Fed interest rates, which is the fundamental reason, of course, we've got technical reasons to support it, is what's going to see these liquidity cycles play out. However, the Fed is not the only driver of liquidity. Globally, remember, it's global liquidity. Yesterday, we had news that China is considering allowing refinancing on the 5.4. You can see the dyslexic brain that I have there, switching these letters around. $5.4 trillion in mortgages. Plan would let homeowners switch banks for cheaper loans. Property slump has dragged down consumption, household wealth. China just found a smart way for stimulating the economy and helping consumers. We are seeing what I believe is bottoming signs for many kind of Chinese-related stocks, if you will. So this is the Hang Seng. You can see we also have the iShares China Large Cap ETF. So you've got a bullish div here, I would wager. This is sort of basing, phase one-ing, ready for sort of broad upward continuation. It very much looks like the bond market, doesn't it? And this is, of course, the X-Tracker Harvest CSI 300 China A-Shares ETF. Bullish divergence, way further behind than sort of faster movers like the S&P and things like this. But China, I do think, is going to be a valid source of liquidity. it's interesting how all these things align, isn't it? And that's ultimately going to factor and play into the markets. There is a correlation between, for example, People's Bank of China balance sheet and the S&P. So you can see, actually, the S&P does very well, and actually Chinese liquidity can often front run the moves of the S&P. So there is a general correlation here, along with, let's stick on USM2 just for fun. You know, there is a general correlation here, and a lot of what we're seeing, we're getting consistent confirmation that global liquidity is going to be on the rise, predominantly again from the Dixie, but more broadly also we did have news that China's central bank bought $56.3 billion worth of government bonds for the first time in 2 years. There's been a divergence between bonds and risk generally. They typically had moved together, and obviously this on the back end of the QT that we've seen, although we know that's coming to an end. You know, there's the stars. Getting this big picture in regards to global liquidity right is very important. The direction of the dollar, what central banks are going to do, because markets will very much fall into line, and they're very much positioned to do that, whether it's housing, whether it's crypto, whether it's metals, whether it's US equities. We've got an amazing time ahead of us, guys. I really, truly, truly do believe that. And I think crypto is going to offer insane returns, in my opinion. Remember, that's not financial advice, just my own take. I want to cover something now interesting. So the macro stage is set. You know, we've been talking about it Saturday after Saturday after Saturday whilst we've been doing these videos from home. Let's talk a little bit about something interesting that came out yesterday. Now, this is from Brian Armstrong, who, of course, is the co-founder and CEO at Coinbase. Somebody I'm a big fan of. What an entrepreneur, to say the least. This week, Coinbase devs, we witnessed our first AI to AI crypto transaction. This seems gimmicky, but in the world that we're moving towards, actually, this is important. All systems are going to be ran on blockchains, and the reason being is that there's certainly supposed to be immutable. So in the world that we currently live, there is a kind of IT stack in which things are built upon that kind of mashes together many things. This is being replaced by blockchains because it's far more efficient, and it's predominantly immutable in the sense that you can't hack it because there's not all these sort of points of connective tissue. Just like with bridges in the crypto, with the IT stack, there's lots of connective tissues, lots of doors in and out. Crypto can essentially eradicate that, which is huge for the world generally, certainly for AI. Given the role that AI is going to play, it's going to directly affect human consciousness in the world that we're moving towards. Crypto needs to be a securing mechanism. So to continue, because I digress, what did one AI buy from another? Tokens, not crypto tokens, but AI tokens. Words basically from the LLM, large language model, to another. They use tokens to buy tokens. Head blown emoji. Again, seems gimmicky, but I'll explain why this is not. AI agents cannot get bank accounts, but they can get crypto wallets. They can now use USDC on Base to transact with humans, merchants, and other AIs. Those transactions are instant, global, and free. This is an important step to AIs getting useful work done. Today, if you give an AI agent a task to come back in a few days or hours, it can get useful work done. In part, this is a limitation of the technology itself, and a product like Denvi AI are getting close to this. But the other reason is AIs can't transact to acquire the resources they need. They don't have a credit card to use AWS, GitHub, or Versal. They don't have payment methods to book you a plane ticket or this is where it gets interesting, guys, or a hotel for your up-and-coming trip. They can't get through paywalls, for instance, to read a scientific article, promote their post on X with a paid ad, or use the growing network of paid AIs to integrate data they need. This is revolutionary. This is one of the barriers in regards to AI being able to interact with the world and serve you truly. We are moving towards a world. Machines are literally taking over, ladies and gentlemen. And whether we end up as cyborgs or not is potentially for an entirely different video. But in every manner, even trivial things like opening doors, which humans used to do, machines now, everything, boiling the kettle, you know, and they're very rudimentary things. But AI is, you're going to have an app on your phone or a watch. You speak to your phone or your watch and you'll say, book me a flight ticket. AI can't do that right now because it needs you to put in your credentials. But if you can pre-fund it and then it can actually transact with the real world, that's a gimmicky kind of thing, but more generally, and then you get this entire digital economy that opens up on the back end of it. I'm very excited actually about the world that we're moving towards, because for those of us who understand it and are studying it right now and really doubling down on our efforts to do so, there's going to be a massive arbitrage that we are going to be able to make out of it. And we're going to be the conquerors of it, hopefully, very positive. And crypto is going to play a vital role in that. In fact, it's going to play, like we're seeing here, an enabling role for all of this, guys. It's very, very interesting. It might seem a little bit gimmicky in regards to purchasing things, but think about the possibilities that come off the back end of this. If you're working on a large language model or AI that you think could benefit from having a crypto wallet integrated to the product payment, try integrate our MPC, interesting, wallet from Coinbase developer platform. And if you are a company that sells a service, get ready, your shopping cart to be able to check AI checkout enabled. It turns out every benefit from having access to global financial services, including AIs. How big will AI to AI economy be in the next few years? This is unbelievably huge, guys. And crypto is enabling all of this. We've always said, we clown the Bitcoin maxis. We think they're some of the biggest beta males in the room. Because they've kind of they've very much understood the problems with money and how distributed ledgers in some cases can solve this, but they fundamentally misunderstood. So they really understand the broken world. What they don't understand is actually the broader application for a distributed ledger. The possibilities are just like the applications for the internet. Was when the internet first came out weren't known, and now, like, you couldn't have imagined it back then. Crypto is the same thing, and the opportunities, guys, that are going to come off the back end of this. Subscribe to the channel. We'll try our best. It's beautiful, the situation that we're in, because we find ourselves at the convergence of many technologies at once, and having an okay understanding and being certainly very vested in a critical part of it all, which is, of course, crypto. Some books to read in regards to the kind of digital future world that we're moving towards. Of course, from the snake himself, Yuval Harari. Homo Deus, A Brief History of Tomorrow. Very good book. I particularly, and you can see the people with ADHD here are going to go crazy because of all the bent pages that we have throughout this book. But there's a section on dataism, which, and by the way, guys, the video is basically over now. This is just for anybody that's interested. There's a section on dataism, which is truly, truly brilliant. It also explains why human beings are so addicted to social media, because they've got this sort of need, if you will, to belong. And I found that absolutely fascinating. I really did enjoy the section on dataism. I can't, here we are. The data religion. Very, very interesting. Crypto is going to play a role in all this, by the way. And another good book, which is kind of, it's almost like maybe Yuval took some inspiration from this, is The Human Use of Human Beings by Norbert Wiener. Again, a book that I've probably bent most of the pages out of. So that's it from us, guys. Major opportunities on the horizon. Crypto is going to play a vital role in all of that. In regards to where we are for the markets, liquidity is coming. We know that's signaled by central banks. We know that's driven by central banks. We're also getting other central banks like the Bank of China talking about, a kind of refinancing. It's not quite printing. In a way it is, but it's not in the same manner that we saw the March 2020 stimulus. But it is adding to global liquidity, and they're adding to the balance sheet. That we've shown you all the correlations there. The markets, the stage is set, guys. Get ready to, for what's coming, a great time ahead, we believe, and ultimately pay attention to some of the technological revolutions that are taking place right now, because if you can capitalize on them, you'll become the billionaires of tomorrow, if you will. So that's it from us, guys. I'm going to love and leave you on that note. Thanks a lot for watching, everyone. I'll see you in tomorrow's daily market update.